we've heard a lot about the many different routes that you can take to be a mathematician, or if you're a mathematician, the different routes that you can take in order to obtain employment, either within the public sector or within the private sector. And there are a plethora of different types of roles that a mathematician, stroke statistician, stroke physicist, data analyst, etc., can do within these different types of organizations. And so I'm just going to touch on yet another one, which is looking at mathematics from a financial perspective, if you like. So I'm just going to mention a little bit about myself before I go into the presentation. I'll come back to it. So I'm one of these individuals that did a sort of joint degree as undergraduates, sort of did three things. I did mathematics, statistics, and computer science. So I had a very good appreciation at the end of the degree about the utility of mathematics, the utility of statistics, and of course, the sort of glue that brought everything together was computer science for me. All of them are somewhat related, obviously, at some level. And so I found them very useful in helping me as an undergrad to understand how statistics could be implemented, mathematics could work within the real world. And it has helped me subsequently as I've grown in my depth of knowledge of mathematics and how to apply mathematics, for example, in the world of finance and development finance, which is one of the areas of my specialism. So what is development economics? If you like, think of development economics as applying economics to developing countries. So to help improve the lives of individuals who are living in countries, not in the UK, not in Europe, for example, but could be sub-Saharan Africa, could be the Caribbean, could be Southeast Asia, for example. So these are what we'd call developing economies. Often in these economies, they are subject to natural disasters. So for example, in the Caribbean, a place that I've lived for over 10 years before coming back to London, they suffer from natural disasters such as hurricanes and storms, and currently undergoing a number of such heavy storms as we speak, it being hurricane season. And one of the activities that I would do would be to analyze the likelihood of a severe natural disaster, such as a hurricane, and assess the potential loss to the sovereign, so to the country. Individual companies or corporates would also have to have what they call sort of insurance for natural disasters. These could be various types, such as blanket bond insurance or specific insurance that would cover, let's say, flooding in the banking hall of a financial institution, or would cover damage to, let's say, computer equipment, etc. So the idea of understanding probability theory is quite useful in being able to determine what the likelihood of such events are, and also combining that with knowledge of finance to be able to determine what the economic costs would be should natural disasters occur. So I've done a lot of work in that area and still continue to do that. The chart that you see there is just a schematic, if you will, that oftentimes is used in the world of finance to be able to determine what the probability would be of a certain type of loss or gain. So COVID, for example, has brought a lot of problems, and in many developing economies, they are increasing levels of debt. So just like here in the UK, the government is borrowing more money, and as a consequence, the level of so-called unexpected liabilities or contingent liabilities for the government have also increased, because the government has to provide guarantees for what we call quasi-government entities. These are, if you like, public sector entities which are not part of central government, but can incur debt that the government would have to guarantee. And in the eventuality that the government is not able, sorry, the public sector body is not able to pay that debt, then the government has to step in, and that's a contingent liability. So I do a lot of that kind of modeling. On one of the trips that I think it was around 2018, so one of the trips that I took to Africa, I was helping the Seychelles government in order to build out what they call the blue economy. So you can think of the blue economy as being an economy built on the oceans, if you will. So you can think of water energy, if you will. You can think of electricity generated from thermal. This is an example of a blue economy. You can think of tourism, actually. Hotels, which are situated quite closest to a beach. That's also an example of a blue economy. And there are other kinds, obviously, including fishing or sort of developing certain kinds of, I was going to say seaweed is another example that I looked at. So looking at seaweed and converting seaweed into biofuels is yet another example. But the Seychelles was quite an interesting one there, because we're looking at ways of developing the blue economy and climate finance, and had the opportunity of meeting up with the president. He's a fellow without, he's dressed without the jacket and tie there. And so it's quite useful oftentimes to see that there are individuals at a very high level within government that are very, very keen and interested in your policy recommendations. And that was one of those. So let me just go back to what I mentioned to you before. I sort of jumped into what I have studied. So at an even earlier level, prior to degree, I studied maths, further maths, and A-level law. Very interested in the law, still am to an extent, but decided to pursue mathematics and statistics and computer science at undergraduate level. I've since gone on to study, I did a PhD in mathematical computer science, and 2 master's qualifications in finance. And my first real job, I should say real job, having finished my PhD, was to work for a company not unlike Atkins, actually. It's a rival company known as Lloyd's Register. And I spent 5 years there as a research scientist, doing lots of mathematical and statistical modeling and software development, analyzing safety critical systems. These are software systems, should they fail, there's a very high likelihood that individuals would die, and that's why they're called safety critical. So I did a lot of work doing that for around 5 years, and then decided that there was no money in that. After 5 years, got married and had a child on the way, and decided that I wanted much more money in order to pay for the mortgage and my family that was going to grow. So I decided to leave there, and I got a job at JP Morgan, which is a US investment bank. I think probably the largest investment bank in America, and certainly probably one of the world's premier investment banks. And I started in an audit and risk management role, and then moved into more of a structuring role, and then went on from that institution to other financial institutions. In fact, got headhunted and worked in structuring, which is like trading, but really structuring financial products such as derivatives, where you need to have very high analytical skills and perhaps PhD in mathematics also, to be able to understand how to manage the risk of those financial products. And I still do a lot of work in that area, but more so for private organizations. I've had a role at King's College for around 6 years, where I am a senior visiting research fellow at King's. And the work that I'm doing there is on computational finance. So in a sense, looking at fancy ways of implementing mathematics for finance. And culmination of some of this work was a book that I published with a colleague just last year in the first of its kind in financial software engineering by Springer. Plug. So you can have a look at that book, and it covers a myriad of different financial derivatives and different structures, and how you can use mathematics at a high level. And a tool which a colleague of mine has produced at King's, which allows you to automatically generate software code from the high level mathematics that we've produced for different types of financial products. So that's quite interesting. In order to do this, you kind of need to have some knowledge of financial products. You need to have some knowledge of partial differential equations. I think you saw an example of this earlier with Naira's presentation, Formula One. Specifically here, the maths that we tend to look at for derivatives are second order partial differential equations. You need also to be able to understand programming. So programming in Python is very popular. R, Mathematica, or even languages like C# or C++ tend to be used quite heavily. Data science is very in vogue now, very fashionable term to use. I wouldn't describe myself as a data scientist, but I would describe myself as a scientist who works with data, if that makes any sense. So there are lots of people who are wearing that umbrella as a data science, so it's a very useful area within computational finance now. There's an area which is heavily used within banks known as value at risk. So I used to do a lot of work at various investment banks like Deutsche Bank, where I was at one point globally responsible for developing these kinds of models for calculating what the risk would be to the bank if certain derivatives or certain financial products were not to be as profitable as we thought they would be. And again, probability models comes to play in being able to analyze what the probability would be of those losses. I also do a lot of work now in AI and machine learning. I'm specifically interested in looking at ethics, where bias can come into models. A bias could be anything. So, but you could have bias in the data. So your sample is somewhat unrepresentative of the population. So that's a data bias. You could also have, a sort of operational bias or programming or algorithmic bias, if you will, where, perhaps there's nothing wrong with the data, but the analytics itself or the code which is used to analyze the data is somewhat biased. And so I'm particularly sensitive to this simply because, being black and having looked at a lot of credit scoring and credit applications around the world, I've actually built quite a few of these systems myself. I'm sensitive to the fact just how easy it is in order to manipulate them, so that disproportionately, certain segments of society cannot, in fact, borrow. So this is an area that I'm increasingly doing a lot more work in. And a final area that I'm doing working, not sort of mentioned here, is in the area of leadership. This is organizational leadership, within which I've recently published a book on leadership. But the idea is to look at different leadership models and ways in which one can employ mathematics in order to be able to reason as to whether one form of leadership is better or more suitable, if you will, for solving certain types of problems than another style of leadership. And you may have come across a game theory, for example. Game theory is just one method that can be used in order to be able to determine, or agent theory, and a method that could be used in order to determine, whether one form of leadership is better than another. So I'm doing some work on that, and hopefully we'll be able to publish some work in the next year on the results of my efforts. And I believe that's it in terms of my presentation. So I'd like to thank you very much.